Your variable mortgage rate just went up again. Let's weigh in on the repercussions and what to do next.
Hi, I'm Jesse Johnson, best-selling author and Greater Vancouver realtor and mortgage broker since 2006.
And I'm Azim Virani, longtime real estate investor and also Metro Vancouver realtor.
So in this episode of Own Your Life, we plan to cover the following hot topics. The Bank of Canada just increased the overnight lending rate by 50 basis points, which equates to 0.5%. Again, how does this impact variable rate mortgages? Fixed rates are currently declining, and what to expect for 2023.
We want to thank you for joining us on another edition of the Own Your Life podcast. As we mentioned in last week's edition, we're bringing these podcasts to you more often and shortening them up in order to keep you better informed about what's going on and all the changes in the Vancouver and the Canadian real estate market. All the more reason to hit the like and subscribe button so you can stay on top of things with us. Now, if you're looking to buy or sell a home in Metro Vancouver, or you're a real estate investor and you want to pick our brains for some information, or even simply if you own property and you want to get a home evaluation, definitely reach out to us anytime. Our contact information is in the description below. So Jesse, the Bank of Canada has just increased the overnight rate by another 0.5 point. How does this affect variable mortgage rate holders?
So to be clear, this does not affect fixed rates. More on fixed rates in a few minutes. Now, let's just say you have a mortgage for $500,000 and you have a 25-year amortization, the overall life of the mortgage. This 50 basis point or 0.5% increase drives up your payment by about $150. If you have $1 million mortgage, which is really not that unreasonable in Greater Vancouver, your payment now has gone up per month $300.
All in all, this one rate increase isn't terrible, but added up with all the other recent rate increases, it's not sustainable for most homeowners. Too many rate increases in too short of a time period. For variable mortgage rate holders, what are you recommending they do? Do you think they should lock in a rate?
Well, no, I would just ride it out. I mean, there's a very good chance we're in a recession right now, not going into one. As most viewers may or may not know, you don't know when you're in a recession until 6 months of data has passed by. So, in order to get out of a recession, the one and only thing they're going to be doing is lowering rates. So if you take a 5-year fix today, in about a month, maybe 12 to 18 months, you're going to be kicking yourself because that's when the rates are going to be a lot lower.
Well, statistically, most recessions last about 10 months, although the repercussions do last quite a bit longer. So this is really hoping that the central bank is not going to raise interest rates again for a while.
Yes, I definitely agree. This does appear to be their last increase from what all the genius economists are telling us. So at this point, we will just wait for it to lay low or stay the same for a little while until it starts to turn around.
So Jesse, it appears that fixed mortgage rates have actually already hit their peak. In fact, I'm seeing that fixed rates are actually starting to come down, finally.
Yes, sir. So the bond yield at the time of this recording, as of this morning, was 3.03%, which is substantially over 1% down from the peak. Now, unfortunately, lenders are very quick to increase rates when the bond yield goes up. But when it goes down, they like to take their sweet ass time. Excuse my French. So as of now, as of this morning, we are able to obtain 5-year fixed rates below 5%, which is great. It's already turning around.
So what are you recommending for your clients as of today? Say specifically a new buyer that's looking to get a new mortgage.
That is a fantastic question. So as of today, I would strongly encourage someone to go with a 1-year fixed term. That would get you a rate of 5.34, which is less than the variable, less than many rates. Now, granted, that does sound higher than the 5-year fixed I quoted a few minutes ago. It really depends. So sometimes a 1-year term can actually be a little bit higher. That's okay. The point is in 12 months, you're going to be able to renew. And you can either renew with your existing lender or switch lenders and get a more favorable rate, because in 12 months, we are expecting the rates to be a lot lower.
Now, the available credit you get for purchasing a home is not only governed by the current rates, but also that nasty thing called the stress test. Jesse, how does this week's recent rate increase affect the stress test for variable mortgages?
Yeah, man, that's a tough one. So in order to qualify for a variable rate mortgage today, you'd have to qualify at a rate of 7.5% to 8%. I mean, that's private lending realm. So it's going to dig deep into borrowers' buying power.
So do you think there's a good chance that this is going to force some families to sell their homes?
That's a good question, and it really depends. So some families will be too tight to the point that this is a situation where they would be forced to sell. Now, there is a workaround for that. So if you're in that situation, give us a call and we can talk. Because from a mortgage standpoint, you're able to restructure debt at higher interest and into your current mortgage as long as you have the equity. Now, if you don't have the equity, you came in with only 5% a year ago, took a variable, not really too much we can do in that circumstance. However, the majority of people do have a lot of equity in their home, especially after the last couple of years. So if you've got 20 grand at 20% interest rates, we can put that in the mortgage and stretch it out in the amortization. 5% rate is a heck of a lot better than 20%. Right off the bat, that's going to free up cash flow. If that doesn't free up enough cash flow to put a slush fund in your pocket, that way you and your family can get through this tough time, because it's probably going to get a little worse on the economy side before it gets better. You can pull out 20 grand and just keep it in a bank account. It's simply there to make sure your payments are covered. Food is on the table during this tough time. So we are here to help, whether you choose to call us for mortgage assistance, myself specifically as a mortgage broker, or you want to call your own mortgage broker. There are options. Selling is a last resort. You only should be selling when you want to sell, when it's your choice, not when you're forced, because that never ends well.
Well, that's it for this week. Once again, I'm Azim Virani and want to thank you for joining us on this edition of the Own Your Life podcast. A reminder to hit the like and subscribe button so you can stay up to date with us on what's going on in the real estate market in Metro Vancouver and in Canada in general.
As well, if you are a realtor and are interested in getting in the industry and have some questions, give us a call. We would love to chat with you about our experience as realtors and share what we've been through. Also, at the same time, we are part of EXP and this collaborative movement, which is an amazing program. We absolutely love it. We'd be happy to share more information about that with you. It comes with a kick-butt coaching program, mentoring, accountability. It's awesome. So I'm Jesse Johnson. Thank you so much for listening. Don't forget to pick up a copy of my best-selling book on Amazon, and we look forward to seeing you soon. Thanks.